Reading through some market commentary today, favor seems to lie with the dollar rand stronger and expectations of selling into weakness above that 675, 680 area for a move back towards 660. We had the unit sitting at 665 a short while ago, so certainly making steady progress. Your view on dollar rand movement?
Yes, good morning, Alishia. Yeah, we saw on Friday the rand weaken a little bit more, as you say, up to those mid-70 range, and then it came screaming lower again, mainly I think on the back of the dollar weakness that was in the market at the time due to those weak GDP numbers, of course the uncertainty surrounding the debt ceiling at the time, and of course we also had an encouraging domestic trade surplus reading. So all of that contributed towards some renewed short covering in the rand market, and yeah, it does look as though the bias this morning remains in favour of the rand bulls. Of course, if we go through kind of 662, then we'll be probably pressing ahead to those lows at the mid-50s. But 62 could prove once again to be a sticky level to breach to the downside.
How sustainable, though, Michael, would a holding of that level be at this stage, where there's still lingering worries that the U.S. sovereign rating could be downgraded from here on out, even if this vote is passed later today?
Yes, I would agree, Alishia. I think that the debt ceiling, most people probably expected it to be ratified, and do expect it to be ratified this evening as well. I think the bigger problem is, and you've mentioned them already, in terms of whether or not we get that credit rating downgrade, and even more importantly, in my opinion, is what the global growth outlook looks like going forward. We had some horrific GDP figures on Friday, and the global growth outlook just doesn't look that good. And I think in such an environment, it's going to be difficult for risky assets to continue to outperform. So those are my concerns, and I don't think we're out of the woods yet by any stretch of the imagination.
Well, we've had this kind of movement on the dollar front. The euro's held pretty steady against that dollar at 143.94, thereabouts 144. What does this mean? How are you reading that specifically? Because does it mean that event risk in the Eurozone and US now seem to be on par?
Yeah, I think it really is difficult to know which is the worst of the two. Obviously, we had more deepening in the European crisis last week, this time from Spain. And really that's why both the euro and the dollar continue to kind of underperform a lot of the emerging market currencies, and also currencies like the Swiss franc and the Japanese yen, which are kind of the safe havens. So yes, it really is a battle of the two ugly sisters, as some people like to say, and it's going to be difficult to see this change anytime soon. So I think the 140, 150 range euro dollar remains firmly in place.